We are very close. So you said runway. I think the stock market is potentially putting in a top here, or only has a month or so left. I do think come January, I think things could get really ugly for equities. I do think it'll continue to be strong for precious metals for maybe a month or so, but there's not much runway. I feel like we're right on the cusp of the stock market making an all-time or a major market top before we start a recession or some bad news hits. And I think gold also has the same. It's a month or two away from topping, but stock market, not much upside. The precious metal space, I think, has quite a bit of upside.
You're watching CapitalCosm. My name is Danny. It is November 17th, 2025, and my guest today is Chris Vermeulen, the technical trader himself from thetechnicaltraders.com. Chris, thank you so much for coming on.
Always a pleasure, Danny. Thanks for having me.
Yeah, let's go ahead and dive right in here, Chris. Let's go ahead and start off macro and then hone in on some specific topics. But, what's the big story out there for you right now? It seems like there's some jitteriness in the overall markets at the moment. Of course, you've been calling this for quite a while. Has the big one finally come? Are we on the precipice of a long-term trend to the downside when it comes to the markets?
Yeah, it's a good question. I mean, obviously, it's really hard to pick a top and figure out where that market is going to be. But, when you look at it from a big picture standpoint, not much has changed in my kind of opinion of where we're at. I have a somewhat of a bearish looking outlook. The stock trends have been trading higher. We have been riding the market up. But overall, the market isn't that strong. The Magnificent Seven have been doing a lot of the heavy lifting. The small caps and the micro cap space over the past couple of weeks have kind of broken down. They're showing signs that they're starting a downtrend. The S&P 500 and the NASDAQ look like they're starting a new downtrend this week. And it could be a fairly precipitous pullback. So that's the big thing right now. And, when we, step back and look at gold as well, gold has been telling us that something is wrong in the economy and the global system for a long time, for a couple of years. Stocks and gold have been rallying together. And I think we're very close to the stock market starting a bigger pullback, potentially 10, 20% here. And we could see precious metal space rally up, kind of like what we saw in 2007, 2008. I think gold and silver have got a very nice opportunity to the upside. The stock market is on the cusp of a real wake-up call for individuals. And the big question is when the market does roll over, do you have a game plan to not only profit or avoid the crash, but to profit from it as well in equities? Because I think it will be pretty dramatic once the music does come to an end at some point.
Right. And how much runway do you anticipate us having when it comes to this crash in the stock market, as well as runway in how far the metals run? Because the metals have run, they've hit all-time highs. And just last week, we almost hit another all-time high in the metals. I believe silver may have hit an all-time high or gotten very close to one. Gold was close to that $4,400 range as well. Was that a double top, or is there still more room to run? So yeah, those two questions right there, if you don't mind answering them. And if you have any charts that you want to showcase, we can go ahead and transition to those as well.
Yeah, so we can look at the charts here. We can just look at the seasonality chart of the S&P 500. So I believe the S&P 500 may struggle here going into the end of the year. We're really on the cusp of starting a new downtrend. Now, seasonality wise, we generally see the market move higher into the end of the year. Now, it doesn't always work that way, but I think the stock market here is actually starting a downtrend, and seasonality I think is going to help hold the stock market up a little bit. I think equities are still going to fall. And I do think we're going to see money come out of equities, and I think we're going to see it go into gold. And we're kind of here in November, middle of November, which usually is kind of up and to the right for gold as well. And I think what we're going to see here is a big rotation of money coming out of equities, moving into gold. And if we kind of look back and compare the 2007, which is the left side, the yellow line is the price of gold, which has been chopping around near the all-time highs in 2007. As the stock market started to sell off, well, we're starting to see the same thing. We've got gold chopping around right now on the right-hand side. This is today, like where we are now, the weekly chart of the S&P 500. The equities are starting to struggle. And I believe we could see equities have a fairly decent pullback. And if we go back and look at 2007, you'll see the stock market ended up dropping about
Mm.
20%, and gold shot up about 30%. Silver shot up around 60%. Platinum, palladium also up about 60%. So there's some pretty good potential when money, if the stock market does start to sell off, Danny, we're going to see that, I think, that money flowing out of stocks, and money's always looking for return on investment. So it is going to go to whatever is working. And of course, I think we're in this sweet spot that gold, silver, and precious metals complex as a whole is going to really absorb and suck up all of that capital and send it higher. So we are very close. So you said runway. I think the stock market is potentially putting in a top here, or only has a month or so left. I do think come January, I think things could get really ugly for equities. I do think it'll continue to be strong for precious metals for maybe a month or so, but there's not much runway. I feel like we're right on the cusp of the stock market making an all-time or a major market top before we start a recession or some bad news hits. And I think gold also has the same. It's a month or two away from topping, but stock market, not much upside. The precious metal space, I think, has quite a bit of upside.
And if you were to juxtapose the trends that we saw in 2007 with the run up in the gold and silver prices, where would that take us today?
It'll take us up to about five, like for gold, it'll bring us up to about $5,100 for gold. As silver, I'd have to look at it. Silver would be, it's roughly about a 60% move. So we could just quickly grab from where we are right here.
Mm-hmm.
So, I mean, we're talking way up, 80 and change here
Right.
to the upside. So this is a pretty big move. I mean, I talked about $82 silver a couple of years ago, saying, if things were to blow off, that's kind of where it could go. And that's potentially showing where it could go if this similar type of situation unfolds. Now, you mentioned earlier, maybe there's a double top in metals here. We saw silver come up and get rejected a little bit. I think in the grand scheme of things, this is just a hiccup. And I think we're still going to see a very big push higher. I think this is a consolidation. I think we're going to see silver ramp itself higher. Same with gold going forward. But again, you have to have a game plan. If silver was to start to break down and break this low around, $45, you might not want to be holding it because it could unwind in a pretty big way. Silver has had a strong parabolic move to the upside, which you can really see when you drop down to the monthly chart, which you and I looked at last time we were talking. We can go way back even further. When things go straight up, they like to come straight back down. So that's what concerns me. But there's potential here, obviously, for silver to have a much bigger spike, because I do believe we're in the best the best scenario for precious metals to have a move than we've ever seen before. Now, every year the case for that gets stronger and stronger, but this time around it feels, central banks accumulating, and there's just a lot more, I think, power behind this potential move. So I think the precious metals space is going to be pretty exciting. It's just, you need to be ready, because when it does reverse, I think we could see a fairly strong pullback we could see 30, 35% pullback in gold. We could see potentially a 50, 60% pullback in silver when the markets do potentially run out of steam, when these little rocket ships going straight up eventually turn around and start coming back down.
That's pretty big correction. I mean, that's a crash by definition, is it not? 50,
yeah,
correction.
Yeah, there's no doubt. I mean, but that's what silver does. Like if you go back, you look at these other parabolic moves, they fell, 88%. The one in 2012, depending where you want to go, 70%. So I mean, silver is volatile. So
but if we were to take this cup and handle pattern, which is, I mean, this has been looked at to death by now, but this 40-year cup and handle pattern, wouldn't you also anticipate a proportional move to the upside, and proportionally, not just in size, in price, but also size in time? So, I mean, it seems like this would be a much longer blow off top than just 2 months from now. It looks like the long-term end of things would possibly take years to manifest, would it not?
Well, I mean, possibly. I mean, I wouldn't call it a cup and handle. I would call it a cup and handle this is cup and handle should be something more like this. Like this is the biggest handle ever. It's a two-fisted. It's a heavy beer mug.
But if you do it on a log scale, it looks a little bit more
True.
apropos.
Yeah. True. Anyway, yeah, there's no doubt, but what goes straight up can come back down very quickly. I mean, you could say this is a 40-year pattern. Well, the right side of the cup fizzled out in 2 or 3 months, or the left side of the cup and the right side of the cup took, depending how much you want to look at it, took a couple months to a year and change, or a couple of years to fizzle out. I don't like to look at 40-year patterns because I don't want to wait 40 years for the other half of the pattern. I want to follow shorter term stuff. I'm already long enough outlooks for a lot of stuff already. People want like daily stuff and weekly trades. So like this, you will grow old following this pattern. And it takes a long time to confirm anything.
Well, hey, I mean, we are entering the age of 50-year mortgages and 15-year car loans. So
yeah,
maybe this kind of fits in line. But let me go ahead and get your take on that while we're on the topic. Don't you anticipate like these liquidity injections, like these these $2,000 stimmy checks, these 50-year mortgage loans? I mean, these are effectively pressure release valves for the bank. These are effectively, in a weird way, I mean, aren't they bank bailouts or bank liquidity injections? In which case, I mean, shouldn't they provide some tailwind for the stock market and obviously for the metals as well?
Yeah, I mean, it helps. I think the governments, they're doing all kinds of stuff to kick the can down the road. I think investors, the average individual, like in the United States and Canada, in most places, are not financially very well. Like there's a huge, obviously, divide between who has money and who doesn't, and so they're doing everything they can to drag out, 50-year mortgage. It drops the mortgage rate, so people can now afford really expensive homes. Giving away free money helps people pay off some debt or make more debt, unfortunately. But yeah, I mean, I'm not a fan of what's going on. I think it's just a matter of time before we see all this implode. There's only so much I think they can just keep giving away and changing. Typically, we see a lot of these changes, like 50-year mortgage, 15-year car loan, and usually they're trying to do this just before something breaks. And so I think we're very close to something breaking. If they're going to these measures to try to cover things up and stretch the dollar out more so people can afford things when, most people are struggling, it's not a good sign. So I'm a little concerned how all this is going to play out. And I think that's, in the precious metal space, I think that's why we're seeing metals do so well, and gold bugs are excited because the perfect storm is brewing for the financial system, the banking system. I think now the banks more so I don't know if they can go bankrupt. I was reading something the other day. I don't go too deep into it. I just don't trust them. I just don't trust the financial system, period. I just trade in and out. I like physical metals. You just never know how all those details, they change the calculations for the economic data. So like if we don't even know when the new number comes out with the changes, like, is it better or worse than before? Everything's just murky, right? It's clear. Everything's as clear as mud, and we're all just feeling our way through it. And eventually something's going to break. And so we have to have a game plan that, hey, if something breaks, you better know what to do, when to sell, what to buy, where to move your money for safety.
Yeah. Are we seeing any signs of the dollar rebounding back, at least through the DXY relative to the other currencies? Historically, when you see the DXY move up, it's typical. Well, the DXY is usually inversely proportional to the stock market, right? So when the DXY goes up, the markets come down and vice versa.
Yeah.
Is this a sign? I mean, just another piece of evidence to throw into the pile, the fact that the dollar's rallying? All right, quick break here, because if you're buying gold or silver the normal way, you're probably overpaying by a lot. And that's because most retail dealers quietly tack on these huge markups, sometimes 10%, sometimes 20%, sometimes even 30%. And you don't even notice it. It's like paying $115 for a $100 bill. Doesn't make sense, right? So that's why I've been using the Bullion Standard Pro. It's a membership that basically lets you buy precious metals at real wholesale prices. The same prices that dealers get. So no inflated premiums, no middleman games. Their platform updates every 5 seconds, straight from mints and distributors. So
What you see is literally the real market. And here's the crazy part. If you buy something like this gold American Eagle, here's the amount of money you're going to be saving at the time of this recording, at least. So it basically pays for itself multiple folds on many occasions, depending on what you buy. And if you want to try it out, they're hooking up my viewers with an exclusive 10% off their first month. Just use promo code COSM10 at checkout. That's COSM 10 at checkout. So if you're stacking, investing, or just tired of getting hit with hidden markups, check them out now. Bullion Standard Pro. Just click on the link down below in the description box and use promo code COSM10. Now let's get back to the video.
Yeah, I think it is. We've seen the dollar fizzle down. It's carved out what looks to be a bottom. It's now, on the verge of actually having a really nice real breakout here. It's got a series of bull flags. I think we could see this kind of ratchet its way up. And I could see the dollar index going back up to like 110, 116, 121, like huge moves that we haven't seen in a very, very long time. If that happens, that means probably the stock market and the economy is kind of falling apart. Eventually, once the dollar does start to rip higher, it's going to put pressure on commodities like gold and silver. They'll probably pull back with a strong dollar. So this is definitely a warning sign. I mean, this is, if we go back and compare 2008, if we actually go and look at what happened, if I could find, what am I looking at for here? If we look at the dollar back in that time frame, you look in 2008, the green line, the dollar was out of favor. Everybody was thinking currencies were going to collapse. The dollar collapsed. If we look at the right-hand side of where we're at now, we look at the dollar is very similar in terms of, if I can get it to show here, the dollar's, it's gone all the way down to the right. It's under, everybody hates it. It's low in value. And eventually, if the dollar does start to scream higher, we're going to see stocks in gold fall. And if we go back here, if you look at the stock market in the background in 2007, it fell like 55%. Well, eventually the dollar put in the bottom and it rallied really dramatically. And the big rally in the dollar put some downward pressure on gold. And I feel like we're going to see something similar to that. I think the dollar could still struggle and bottom here for a while. I think gold could shoot higher, but eventually I think you're right. I think the dollar is going to come to life here and put in a pretty big rally and catch a lot of people off guard. I don't know. So many people hate the dollar. It's like probably the most hated currency, I think. Everybody says it's going to crumble, but every time they think that, there's usually a sharp turning point in price, and it goes the opposite direction.
Well, yeah, when everyone's on one side of the boat, it's usually wise to take the other position. That means everything's already priced into that in that regard.
Yeah.
What about interest rates? Because it looks like they're kind of losing control of the interest rate here. We cut rates whopping 25 basis points on two separate occasions within the last couple of months.
Mm-hmm.
Now they're talking about another 25 basis points. But what's interesting enough is that the 10-year did not respond in tandem with the shorter end of the yield curve, which is the Fed funds rate.
Mm-hmm.
And so how do you square that circle? What's going on there?
Yeah, it's tough. I mean, I'm not an expert when it comes to the yields, to the interest rates. It's not something I focus on too much. I mean, based on the charts, I think there's a lot of mixed signals. I think we've got potential problems with inflation staying up and climbing higher. We've got, people want to lowering interest rates, but they kind of counter each other. So I feel like we're just going to ping pong around here. When you look at the long-term charts, though, of interest rates and you chart them out, it is showing a much higher interest rate. Like it is pointing on the 10-year. It's pointing to like, 7.5 to 8.5%, which would obviously crush the United States in terms of the debt and all of that stuff. But that's what the chart is pointing to. So it's tough. It's got, somebody pulling for, higher rates, another wave pulling for lower rates. And so I think it's going to be kind of a stalemate here. It's going to just drift around. I think it's hard to get a gauge on. It's not something I really specialize in. I think it has a lot more to do with kind of policies. And I don't really get into that side of the markets. I really focus on price action itself.
Gotcha. What about energy prices? What's your update on energy?
Yeah, I think crude is going to eventually have a pretty big pullback. I mean, it's already in a very strong downtrend. I think eventually we're going to see a break below this $55 per barrel. I think it'll work its way down to about $45 per barrel at some point. And in the next year or so. I think when we zoom back here, I mean, I think we have a very precipitous fall once that $55, $56 mark is broken, and it's going to want to probably settle down somewhere between 40 and 40, $48 per barrel. And that's going to hurt. I mean, that's going to mean the economy is slowing. I think it's just a matter of time before we have some piece of news that hits, and it's going to cause all kinds of haywire. I think the economy will slow. Crude oil, the fact that it's been going down for so long just already tells us things are kind of slowing down. There's not a lot of demand. There's not much interest for it. It keeps testing this 55, 56 level. I think another test of it, it could break through it. And it'll probably coincide with some piece of news that says, hey, unemployment's rising, maybe manufacturing slowing, all of that stuff. So I'm not bullish on energy. I'm pretty bearish on it.
How does one prepare for what's coming? Nothing specific, but just in generalities.
Yeah, I think one of the biggest things is like to have be mentally prepared. Nobody wants to think that there's a big bear market. We could lose 50, 60% of equity pricing, and real estate prices could drop dramatically. And but it happens. I mean, this type of cycle happens over and over again. Depending on your age, you've probably already been through 2, 3, 4 of them. So you have to have a game plan, and accepting that they're going to happen is the first thing, instead of just turning a blind eye and saying, I'll just ride it out. The second is to figure out how to have a strategy to identify when things are getting ugly, that you should be like, you know what, it's time to step aside. I'm happy just earning interest and keeping my account and my wealth and my lifestyle, versus thinking I need to try to make money. So people need to come up with a decision of, do they want to find a way to sidestep it and just maintain their current lifestyle and their account size? Or do they want to take advantage of the chaos and potentially profit from falling pricing, and then be able to reinvest after the bottom's been put in, and be able to repurchase, at a really good price? So there is no super easy solution. You kind of have to follow it and kind of move your money as we go. I think precious metals is the sweet spot right now. I think you're going to want to get out of equities at some point, because they're going to have a big pullback. And I mean, gold has got that, physical gold is that safe spot because it's out of the banking system, right? It scares me, the banking system, that they can just lose all your money and you're toast, even though you put it somewhere where it's not supposed to be at risk. Right.
What does Warren Buffett still have a record cash allocation on hand, or has that changed recently?
I think he does. I mean, it's probably changed, but I'm pretty sure he's heavy in cash. I think he sees some difficult times coming.
He also bought Google recently. I don't know if you saw that.
He bought Google?
Well, he bought
the shares.
Yeah, the shares.
No, I didn't see that, but that's interesting, because I feel like Google, I barely use Google anymore. And if I do, it's funny. I was looking to do some research, and I used to do SEO and haven't done it in years. And I'm expecting you put in a term, right? And then you see like a list of articles, and then you like skim through all the articles, and you get a general bias. And now you don't find any articles. It's either businesses or just different. It's Google has changed so much. I mean, AI is by far the easiest way to search for stuff now, but I'd like to see where Google is going to pivot and shift. I don't follow them closely. I don't know what they have cooking, but their whole search engine thing, I think, has had a turn for the worse. I think it's more just paid sponsors now.
Yeah, there it is. This is out from Reuters. This 2 hours ago, actually. So Alphabet shares hit record after Berkshire makes rare tech bet with almost $5 billion stake at Google.
Wow.
So I haven't gone through this article yet, but the summary is concerns over AI spending. I guess he just wants a position in Google.
I mean, the AI spending is out of control. Like,
yeah.
Everybody have just been throwing all risk to the wind. They're just like, invest, upgrade, get more AI. I want to invest in AI. Like, they're just going all in. Everybody's going all in at the same time, which is creating this huge feeding frenzy. And a lot of these companies, they're spending hundreds of millions and billions of dollars. And they're like, they don't know when they're going to turn a profit. They're all thinking they're going to like have some breakthrough point where things get even better. But I think we're at an interesting turning point. I think there's a lot of work for AI to be really good. I mean, I always look at it as like the It's almost like, what's that TV show with that little kid who's a genius? It's like a 5-year-old genius, the AI. It knows everything, but it's so wrong so many times. And then, well, I thought this is better. And it's always like, you're absolutely right. That is a much better way to do this. And you're like, well, why wouldn't you just give me this right off the top?
Doesn't have common sense. But in a weird way, isn't a bet on Google kind of like a short on AI? Because who would stand to benefit the most out of an AI bubble popping? It would be Google search.
You'd think so, I guess. If they were to flip back to it, yeah.
Because because AI effectively eats at the market share of search.
Mm-hmm. Big time.
Maybe that's the rationale. I mean, I haven't dug too deep into it. If you guys know why Warren Buffett has about a $5 billion stake at Google, or at least want to speculate, let me know in the comments down below. Really interested in getting your thoughts and ideas here. Chris, I think we've covered pretty much all there is to cover that I had in line. Yeah. Anything else that you want to talk about that's prescient and on your mind before we wrap up here?
I think we covered it. I think if we had to sum it all up, I'd be like, I like precious metals still. I think there's one more big push that could last a couple of months. I think we're very close, though, to a significant high in precious metals where they might start to pull back because the economy is probably going to have a turning point. The stock market will be collapsing. So I like metals. I think the stock indices themselves, I think they're losing their uptrend here. And I think we're about to see some bigger selling, and it's going to go. I think it could buck the trend of seasonality. Naturally, we see the market go higher, but based on the momentum and what's unfolding, I think we're actually setting up for the stock market to have a pullback into the end of the year, which will be a pretty sour way to end the year. Although it's markets are up pretty dramatically, so it'll still probably be a positive close on the year. But I think be very cautious with equities at this point.
Understood. Well, Chris, thank you so much for coming on, my friend. Always a pleasure hearing from you and getting your market updates. For people who want to see more of your work, where can they find you?
Best is go to YouTube, The Technical Traders as my channel, or go to my website, thetechnicaltraders.com. I have a free newsletter there. You can follow along, get my morning analysis or afternoon updates sometimes there, and some discretionary trades. So some extra bonus trades. So if you want to just copy the trades I do with my portfolio, I trade ETFs, tell you when to get in, when to get out, portfolio allocations, targets, stops, all of that stuff. And we all just kind of navigate these markets together.
Awesome. We'll have the links to all of your socials down below, including your YouTube. Thank you so much for coming on, my friend. Guys, if you enjoyed this podcast, drop us a like and comment. Go, Chris, go in the comments section. And if you'd like to support us, hit that like button, subscribe as well so you don't miss an episode. And by liking and subscribing and commenting and doing all the YouTube stuff, it does help in pushing us in the algorithm. So it may not seem like much, but it certainly does go a long way. And if you'd like to support us even further and get a cool product in return, then check out our good partners over at the Bullion Standard Pro. Click on the link down below and use COSM 10 at checkout, COSM 10 at checkout, and become a member where you will be able to buy your gold and silver at cost at wholesale prices. So kind of like the Costco of precious metal, so to speak. So if you're interested, link to that is down below in the description box as well as the pinned comment. And you do help in supporting the channel that way. And again, check us out on Substack as well. CapitalCosm.substack.com. Get all of my stuff early and ad-free and uncensored. So with all that said, we'll catch you guys later. Thanks for watching.